I'm Bryce Butler from Access Ventures, and this is More Than Profit, a show where I talk with founders, investors, entrepreneurs, and leaders of all kinds about living and working with purpose, how they do it, and why. My guest this week is the executive director of the U.S. Impact Investing Alliance, and she's been working to shape the field for many years. I had a ton of fun sitting down with Fran Seegull to learn more earlier this spring, and I'm excited to share with you her unique story of passion, resolve, patience, and ambition. She's an impressive person that has literally helped build the field of impact investing brick by brick. Today, she is working day in and day out to keep the movement moving forward and filling gaps that still exist a couple of decades in. But what has shaped her life and direction is an impressive story.
So I grew up in Queens, in Flushing, New York. So I'm a native New Yorker. My dad grew up in the Bronx. My mother grew up in Brooklyn. I grew up in Queens. I went to college at Barnard. So all New York.
Wow.
And grew up in a liberal Jewish household, very kind of social justice focused. And public schools. So went to public elementary school, public junior high, very integrated student base. And when I was about 14, my parents moved to suburban New Jersey.
Oh, goodness.
And it was a big culture shock. And so you can imagine coming from, I wouldn't quite call it an inner city school, but it was a tough junior high school, very integrated. And I just grew up in a very integrated environment. And I went to a very homogeneous, very white high school.
Wow.
And so that was an interesting moment and one that felt strange to me socially. And my father...
what were some of the decisions that went into kind of the move? Was it a job transfer or?
No, it was purely access to better public schools.
Okay.
So private school wasn't an option. And so we went to public schools. And so my brother went to a suburban middle school and high school. And I went there for high school and then quickly went back into the city and went to Barnard College at Columbia, which was great. I majored in economics and really thought that I would go to Wall Street.
Oh, interesting.
And ended up going into the contemporary art world. And which was great.
So how did you go from a BS in economics to the contemporary art world?
So my father's a businessman and my mother's an artist. And I grew up around art, a lot of art museums in New York, and kind of went into the business of art.
That's awesome.
And really enjoyed it and relocated out to Los Angeles in my early 20s to open up a gallery for a New York and Cologne-based gallery. And so I had an early entrepreneurial experience, which was really important and formative for me. And ended up working at a family foundation out in Los Angeles. It was called the Peter Norton Family Foundation. So Peter Norton is an early software entrepreneur. Norton Utilities, Norton Antivirus was bought out by Symantec, and he started a family foundation focused on contemporary art. And so I had two jobs. I helped structure grants and give grants away, which is how I got kind of interested in philanthropy. And I also curated their collection of contemporary art.
Oh, fantastic.
So
that's quite interesting. Oh my goodness.
Super fun. The art collection itself was work by young artists, but diverse artists. So diverse in terms of gender, in terms of race, sexuality. And it was a very, very dynamic collection, and I really enjoyed it. And so that's sort of how I spent my 20s.
Wow. So grew up in New York, but then moved to the suburbs. I'm sure there, obviously, a culture shock. Did your parents have much of a discussion with you in that? Or was it just, hey, we're moving to the suburbs, we need better schools? How did that make you feel? And what kind of, were there any experiences in your high school years being removed from what you understood to be probably normal, kind of this integrated school system that was very familiar to you into this homogenous system? Mm-hmm. What were some of the things that you experienced that maybe shaped your perspective on community today?
I definitely experienced a loss of the heterogeneity of growing up in integrated schools and integrated neighborhoods, and it felt strange to be in a predominantly white suburban environment. There were kind of socioeconomic implications, there were racial implications, and I think the way that I coped was to focus a lot on academics, focus on getting into college, getting back to New York.
There you go.
And I was, a lot of sports, and I was
That's awesome.
Yeah.
Well, it had to be a tough decision for your parents, though. Growing up in inner city New York, and with a liberal progressive kind of worldview, but then recognizing the importance of education and wanting to provide the best for you and your brother, and the greatest opportunities for you to progress, probably brought some confliction, recognizing, okay, we have the agency, the ability to move our family for better schools. So man, that had to have been just an unbelievable difficult decision for them.
I think it probably was. And it really had a big implication for my father because he was commuting into the city. So It was a much bigger commute. And, I remember him, taking the 6 a.m. bus and getting home really late. And it was hard on him, but it was a sacrifice that they made for our education. And I think that that's maybe a classic kind of Jewish progressive household, a primacy on education. And they made the sacrifice and to move away from friends and family, a harder commute so that we could have a better education.
That's cool. So you got to this family foundation, and I know as a part of your story that was a pretty formative moment, working on as a program officer, more on the grant side, but then really kind of starting to think about the endowment, the capital, and like how do we think about our values, mission, return, community, and impact, and all of these things. So talk to me a little bit about that experience at the Family Foundation and what you came to understand and where that led you beyond that.
Yeah, so this family foundation gave, some social service grants, but they also gave grants to contemporary art, and the kind of contemporary art that they were interested in supporting, and the kind of contemporary art that this couple Peter and Eileen Norton, were interested in collecting, again, was very much focused on diversity, which was fantastic, and I really enjoyed it. But I started to wonder over time how the endowment was invested. So as you may know, I know that you know, as your listeners probably also know, that in order to maintain your charitable tax status as a foundation, you need to give away 5% in grants to charitable entities. And over time I started, and I will say that the kind of grant making we were giving, I think, was very progressive, interestingly structured, even insurgent. Like we would give curators grants to young curators to buy works of emerging artists for major institutions.
Oh, wow.
And that was a way of subverting the power structures that exist in museums, where it's the chief curator and the board members that really have, and committees that have votes. And so it was about circumventing and giving agency and power to these young curators. So that was fantastic. But over time, I started wondering how the endowment was invested and whether it was invested unconsciously at cross purposes to the social justice and economic justice and racial justice orientation of the grant making.
Yeah.
And that really led me to go to business school.
Wow.
And that's why I went, just to understand how to think about investment in a different way. And this was, just for perspective, I ended up going to business school from 96 to 98.
Yeah. And it was there that you authored a piece on the purpose of money and endowments and how we think about these things. Talk to me a little bit about that. And 98. I mean, this is much before impact investing was even coined. So, what did that mean for you personally, and then also professionally? Where did that take you?
Yeah. So I went to business school at Harvard. And at the time that I was there in the mid-90s, there was an initiative on social enterprise that John Whitehead, who was the former chair of Goldman Sachs, founded. But it was very much focused on nonprofit social entrepreneurship. So using the techniques and practices of for-profit business to make nonprofits more entrepreneurial and more successful, presumably. And I had come from that world. I was much more interested in how to use for-profit business models and the capital markets as a way to make change in the world. And so there weren't a lot of classes or any classes that covered this issue. And so in a way, I charted my own course of study. So I ended up doing 2 papers. One was a year-long field study on women entrepreneurs' access to venture capital.
Wow.
And at that time in 98, women entrepreneurs received 2.5% of venture capital. And now 20 years plus hence, it's like 2.2%. It's basically the same.
Yeah.
And we know that women, African-American women entrepreneurs get about 40 basis points of venture capital. And so what I tried to do is look under the hood of that statistic to try to understand why it was that women weren't getting more venture capital, and didn't, just take it at its face and say they have lack of access. And of course that was part of it, but you also have to look at why different types of entrepreneurs start businesses. And why they run businesses. And so tried to take a nuanced look at, technology education and all that. So that was really fun. And that said, 20 years later, I'm disappointed to see that the dial has not really moved very much. And while we see women, like the number of deals that women do in venture capital is going up, there's an upwardly sloping line, their percentage of capital or the average deal size is actually fairly flat.
Wow.
And so women are maybe getting more access to venture capital in terms of numbers, but the deal size isn't growing. So that was formative for me. And I think that the dynamic around minority entrepreneurs' access to equity capital, people of color, is a similar dynamic, not exactly the same. And then the second piece of independent work that I did was a paper from my venture capital professor, this guy named Josh Lerner, who's very well known in the venture capital private equity space. And I tried to look at, if there was an x-axis of financial returns and a y-axis of impact, I tried to look at whether there was a trade-off or whether there had to be a trade-off, or if there wasn't a trade-off between impact returns and financial returns. And so I plotted, philanthropy on the, presumably high impact but no financial return, even though there's, a tax shield, but
sure.
Forgive me the detail.
Yeah, exactly.
Forgive me the detail. And then venture capital, which is without regard for impact and, without necessarily intentional impact. And then I tried to create a curve that connected the two. So there's a line, and I posited that there was like an efficient frontier where you could have very strong impact returns and very strong venture style returns. And Josh Lerner didn't agree with me at all. He thought that if there was a curve that connected those two dots of venture capital and a philanthropy, it was concave, meaning if you take impact factors into account, you suboptimize financial return every time.
Wow.
And I thought that was not the case. So that was one kind of thing that he didn't agree with. And, to be, it was a different world back then. I mean, I understand why he didn't agree with me, but I still had some conviction around it.
Yeah. Well, in both cases, you were a pioneer to even just identify those as challenges and opportunities, problems that we could address as a market in a conscious way. So he disagreed, but there were some that maybe agreed with you. And so what unbelievable confidence and courage, despite obviously his reputation, to continue forward. So where did you go after that piece, and what transpired in the years following?
Well, before we advance there was just one other kind of conclusion that he didn't agree with. And that is that the spending your life making money by the venture capital side, or really, without regard, accumulating wealth without regard to social, economic, and environmental impact, and then giving it, this gets to the two-pocket issue that you've written about, and, 10, 20, 30, 40 years hence, starting a charitable, a foundation where you give away 5% of your money and 95% is invested without regard for impact, was not the best way overall to create returns, a basket of returns for society.
Oh, interesting.
And that has been a blueprint. Those two conclusions have been a blueprint for my career.
Yeah.
Going forward. So I feel like in some ways I've had an impact pure play career, even at a time when, impact investing as such, it would have been 10 years before the term was coined, and the market has come up to meet us the way it has now.
So if I may, at that moment though, you're at Harvard, you've got all these experiences, these beliefs, and yet you have, Harvard has unbelievable faculty, right? World-renowned, and you disagree with them. How did you feel? Like, how did that make you feel? You are a student, putting yourself into the studies that you're doing, and really profoundly, I think, a believer in what you're seeing and what you're putting forward. How did that make you feel to almost, in some sense, be rejected for what you were putting forward as a new concept?
Yeah, I think in some ways I'm a contrarian.
That's good.
And I felt like the fact that I was able to have this dialogue with Josh Lerner and that he disagreed with me was a point of pride. And it would have been, I go to my reunion every 5 years. And so at my 5-year reunion, and of course he's always giving, an alumni lecture because everyone wants to know what he has to say about venture capital and private equity. And so I went at year 5 and I said, Professor Lerner, you may remember me. I wrote this piece for you on the trade-off. You didn't agree with me. He still didn't agree with me. And then 10 years, I was working for a small venture capital fund, an accelerator. And I said, how about now? Do you do you believe me now? And he said, get back to me when you have your returns. He wasn't interested in my impact metrics at all. And then year 15, he started getting more interested. I think MacArthur Foundation actually had him do a study on community development investing. So he was kind of coming around. And then around my 20th reunion, I was at HBS for a gathering of market rate impact fund managers, and he gave the evening keynote speech. And I didn't know if he remembered me or my work, and he gave me a shout out and said, 20 years ago, someone in this room wrote a paper that basically kind of foretold what you're doing now. And I didn't agree with her, and I don't know if he totally agrees with me now, but I think it's things are coming around, and the world is changing as we know, and there's resource constraint and population growth, income inequality, direct personal experience of climate change, and these are like material factors, and so I think the world's coming up to meet us now.
I think it's worth noting. I think there are so many people would receive criticism and not respond in the way you did. So the fact that you took it and every 5 years went back, is a testament to your courage and just like, no, I truly believe in this and I'm going to put myself into this. And I think if we can build some momentum as a community, we can really do something here. We can really force change and really see some transparency come that's beneficial to the markets and beneficial to the communities in which we live. So kudos to you. So went to several different things beyond that, but now you're at the U.S. Impact Investment Alliance. So talk to me a little bit about that. Like what's two things. What is the purpose of it? What's the value of this alliance, the mission of it? And what are you working on in the present day?
Sure. So I've was recruited to be the inaugural executive director of the U.S. Impact Investing Alliance, which is a field-building organization dedicated to increasing the flow of capital for impact. When we use the term impact investing, we mean investing for intentional social, economic, and environmental impact alongside financial returns across asset classes. So some folks use the term impact investing to mean private debt and equity, maybe real assets. For us, we also look at the capital markets. We look at the public markets and, really from cash to real assets,
Good.
the whole asset class spectrum. And we believe in a future that where measurable social, economic, and environmental impact is at the center of investment decision-making, not just alongside risk and return, but we believe that impact is implicated in risk and return, especially in a world that is changing. And we work in a couple different ways, and I can dig in wherever you'd like. The first is around public policy, so driving private capital for public good through federal government engagement. The second is catalyzing capital flows by working with select market segments of asset owners, mainly foundations and donor-advised funds.
Yeah.
And the third is more bottom-up movement building.
Yeah. So I think one thing about the U.S. Impact Investment Alliance, so I think it's interesting. What do you see as the importance of this alliance at this point? So, the field's been around a decade plus. Your work was 20 years ago. Last couple of years, there's been a lot of signals that there's a great shift in the market, which is amazing. So what is the importance of the alliance at this point in history to really press this forward as a movement?
Yeah, so and there was a panel at the Winter Innovation Summit about impact investing going, I think they called it from the shadows to the mainstream or the margins to the mainstream. And that has really been borne out. And I think that that's great. And I applaud the mainstreaming of impact investing, but we're also watching with concern.
Yeah.
And so scaling the field with impact integrity is something that is really important to us. And so I believe that measurable social, economic, and environmental impact is an investor right. And we know that all investing has an impact, the food you eat, the car you drive, the clothes you wear have an impact. And I believe with generational shifts, millennials and Gen Z, they will demand transparency. And once transparency comes, what we are going to find is that there are a host of, yes, positive, but also negative externalities that have been, the expense has been on the back of communities and the environment and workers and others. And I call it off balance sheet financing.
Yeah.
And there's almost like this phantom balance sheet. And when we have transparency and we have priced externalities, the balance sheets and income statements of companies, public companies and private companies alike, will look different.
Yeah.
And to me, that is something that we strive for.
Yeah. I think it's interesting because it is interesting when things become mainstream, you start to see everybody jump on the bandwagon. Because there's a lot of money, quote unquote, to be made as things become more adopted and accessible. But the scariness of that, or the danger, is that the scale happens at a pace that discounts the impact, or we greenwash. So talk to me a little bit about that's an interesting I think role for the alliance, is to make sure that we scale with integrity and scale with the right purposes in mind. And then we're watching these things and we're measuring these things. I wrote down as you were talking just this intentional impact. I think it's an interesting word choice. Impact investing is intentional impact, which is really helpful, because I think in our society where we see a lot of greenwashing or a lot of great marketing around CSR and other things, that it's important to really think about the intentionality with which entrepreneurs and investors are pursuing the impact in the world. So talk to me a little about, as you see it going from the shadows to the mainstream, what gives you hope? And then on the other side, what gives you pause?
Mm-hmm. Okay, what gives me hope? Until recently, I lived in Los Angeles, and I was the chief investment officer at Impact Assets, which is an impact investing donor-advised fund, a fund that just topped $1 billion of assets under management, and it was a great group and a really fun job. Yeah. And it enabled me to teach at USC one night a week at the business school. I actually taught undergrad and business school students and grad. And those students gave me hope, especially the undergrads. I mean, these are students that are 18, 19, 20, and they fundamentally understand that resources are constrained, that the world is changing, and that we need to integrate and understand and make transparent impact if we want to operate in the world and live in the world and thrive in the world the way they want to. So those, especially the young ones who just implicitly get it. Now, granted, it's a self-selecting group.
Sure.
So that's something that gives me hope. And one other thing that I wanted to mention on this topic of impact integrity that I think it's a hope play. So we recently worked with a coalition of foundations and other donors to raise a donor collaborative called the Tipping Point Fund. And it's a consortium of 9 donors. We raised about $12.5 million. And it's a grant facility to help build the hardest to fund public goods that will allow the impact investing field to grow with integrity. And so we kind of canvassed with a consultant and a group of senior staff members of these leading foundations that practice impact investing. We canvassed the field, public markets, private markets, retail investors, institutional investors, and identified a set of barriers to growth with integrity. We sifted all of those challenges to understand which ones are best addressed by grant capital versus which ones will the market solve for on its own. We sifted again to understand which ones would be best suited to a pooled approach to grant making. So instead of foundations and other funders going it alone, but going it together.
Wow.
And what areas are chronically underfunded?
Yeah.
And the areas, the funding priorities that we honed in on, one is public policy and public engagement. If you think about other kinds of industries, they spend money on public policy. They spend money on public engagement. They understand that it's a thing and it's really important, and that it's so scantily funded in our field. And public policy is can be so catalytic to our field. And the second area is indeed around data, metrics, and measurement. And so I think all of us, when we speak, those of us that speak about impact investing, folks want to understand about the growth. They want to understand if there's a financial trade-off, and they want to understand about impact washing and, of course, how to measure impact. And so we have raised this donor collaborative, and we're continuing to raise grant funds as a way of being very targeted to fund the most chronically underfunded public goods that everyone enjoys. So we have, by my count, something like 9 or 10 incumbent private equity funds that are raising multi-$100 million funds, multi-billion-dollar funds. They're gathering assets, and they're doing so. They're kind of surfing a wave that has been built over decades with precious grant capital, and we feel like folks should fund the rails that they ride on when they deploy capital. So, join us to help build the impact investing infrastructure to try to scale the field with integrity.
That's great. And you've been working on that for a while.
2 years.
Yeah. And that's impressive. I mean, because it's definitely, it's a need in the space, but it's one that oftentimes gets overlooked and underfunded. And so to kind of pioneer that and kind of press through, like, yes, I understand, but we really need this. We need this as a field if we're going to scale with integrity. So kudos to you and the team. Well, I wanted to, so what does give you pause? Because, 20 years ago, you wrote this paper, but I'm sure even today, as you look at where we are as an industry, as we think about impact investing, as we think about philanthropic capital endowments, is there anything that gives you pause as we look to the future, or things that you still see as trouble areas that we need to be aware of as we continue to scale with integrity?
Yeah, so as the field grows, and we tend to be very fixated on the supply side, the supply of capital. And I'll admit that, I am too, because we need the capital in order to deploy the capital to, generate the impacts that we seek. But I still think that there are misperceptions of risk around impact investing. I think that there is a discounting of some of the data that we have that shows that there are certain asset classes and certain kinds of investments where you can have impact as well as financial returns, and instances where impact actually can mitigate risk and drive return.
Yeah.
So I still think the capital markets are motivated in different ways. There was the Business Roundtable announcement in August of 2019 where 181 CEOs signed on to the new statement of corporate purpose, moving from a Milton Friedman-esque kind of 70s version of maximizing shareholder value without regard to other aspects of value, to one where they would look to maximize stakeholder value, including but not limited to shareholder value. I think that was great, but I also feel like there needs to be some accountability. When we think about what makes markets move, it's transparency and accountability and access to data, and we'll look to see whether those CEOs and those corporations rise to the challenge.
Yeah, their words become action, right?
And this is at the same time that the Business Roundtable has been lobbying the SEC around the erosion of shareholder rights.
Oh, wow.
So I think we need to, and this is where, policy really matters, and we think a lot at the Alliance about the power. Well, how do you shape markets? You shape markets through regulation, but you also shape markets through self-regulation and kind of market shaping behavior. And so we keep our eye on both.
That's great. So I think this is a question that I think you are uniquely positioned to answer, or at least discuss, and it's somewhat related, but as an educator, and you mentioned kind of the hope that you have in the next generation. What are some of the things within education, specifically higher education, or maybe it's high school, that we can really help? What do we need to do in order to continue to press into shaping the future of our markets and the leaders that are going to step into these corporations? What would you say to institutions of higher learning that they need to be considering and pressing into, and courses that they need to be considering to really help move this forward?
At the very basic level, and I think that this is high school or post-secondary education, critical thinking skills, understanding about the subjectivity of, the representation of history as objective truth, just some basic, that news has a point of view.
Yeah.
History has a point of view that isn't always inclusive and often is not inclusive. I think that we should be teaching personal finance skills in high school and in college. And that is super important for everyone. I'm a fan of entrepreneurship education at the high school level. The American dream is built on, economic empowerment through entrepreneurship. Yeah. And I think we see a renewed interest in entrepreneurship as we see second and third tier cities, as well as rural communities being hollowed out by the consolidation of corporate power, the flight to the flight to cities, the rise of technology, the rise of opioid addiction, and so thinking about entrepreneurship and community revitalization, I think, is really important. And so the sense of community and the sense of hope in communities, I think, is really important. So those are some initial ideas.
Fran is passionate that every investor, in her words, know what they own and better understand the implications of what is in there and the impact that it is having. If you'd like to learn more about Fran and the U.S. Impact Investing Alliance, visit impinvalliance.org. And make sure to follow Fran on Twitter, where she posts a ton of great content, @Seegull. Again, if you've liked what you've heard, drop us a review, subscribe, and stay tuned for next week's episode. Check out our work at accessventures.org. I'm Bryce Butler. Thanks for listening.